Like we said, today we'll also be taking a look at the latest developments around interest rates in the country. Of course, parliamentarians did pass a bill that is set to cap the interest rates, and this has been received in different measure across the market. And joining us right now is Dominic Omondi, who is a writer with the Standard newspaper here at KTN. Many thanks, Dominic, for joining us.
Thank you.
So, Dominic, of course, you've been following up on this developing story around interest rates.
Yes.
Just bring us up to speed. At the moment, we do understand that it is before the president to assent to the bill or not.
Yes.
Where do we stand?
As you've rightly put, the bill is awaiting presidential assent. And of course, there's some kind of tug of war between those who like the bill to be pushed, or those who say they are for consumer protection because they feel that consumers have really been, quote unquote, been exploited by banks. And there are those who are saying that, well, this is not the correct way of helping consumers. The measure will be counterproductive because in itself it will somehow mess around with the market, and in the process there will be little, if any, loans that will go to the poor. So that's where we stand. We are waiting presidential assent, and well, we will just have to wait and see.
And Dominic, many say that Kenyan interest rates are pretty high, averaging about 19% at the moment.
Yes.
So once this law comes into effect, if it is passed, what is likely to change?
Well, it's true that interest rates are high, and of course, none other than the governor, Patrick Njoroge, the governor of CBK, has said that several times and urged banks to bring down their interest rates. But of course, there is that school of thought who says we've not exhausted every other factor that is bringing about the interest rates going up, including trying to clear up the banking sector and make sure that it's competitive enough. We know very well that a few banks control much of the deposits, for example, and we know very well that
actually 7 banks.
Yeah. And we know very well that the Competition Authority of Kenya has already been attracted by that, and is investigating the fact that probably the system is not operating in a way that is competitive enough to make the interest rate to go down. Of course, and also there's the issue of whether capping the interest rates will in itself bring down the interest rates that are charged to consumers. And some people are saying that instead what will happen is that you will see banks start cherry picking the kind of people that they are going to lend to. Those who are not risky enough and probably going out of rural areas where probably they can't.
So Dominic, just educate us a bit more on, so if this bill is passed, what sort of rates are we likely to see being charged in the market? Any average?
What we are talking about, of course, and what has been in the public domain, we are talking about from a high of 22 to a low of 14%. But that is without looking into the dynamics of capping interest rates. I should add that the manner in which the interest rates, the legislation was done was, for lack of a better word, pedestrian, because they didn't look at all the factors that need to be looked at, or countries that have capped have looked at. You have to, when you're bringing down the interest rate, you're trying to encourage access, financial access. So, of course, you're looking at the people that really need that credit. And so probably you look at a certain credit. You also have to make sure that banks will also include commissions and fees in that capping, that those also are capped. But as things stand, we don't know if commissions and fees have also been capped. So it's really pedestrian. And we don't know really if it will bring down the interest rates as they're saying.
All right. And maybe as we wrap it up as well, Dominic, this is not the first time time we are seeing an attempt to have a law that caps interest rates. We did see one such attempt by the former Member of Parliament for Game constituency, Joe Donde, the popular Donde bill, which did not also see the light of day. Perhaps what can Kenya pick up from other countries that have set a cap on interest rates? How has it played out for those countries?
There are divergent opinions as to how the capping of interest rates in different countries has worked out. What we know is that, of course, as you've rightly put it, this is not the first time that we are attempting to cap interest rates. So there are underlying issues that we really haven't been able to deal with. I should also say that what we are seeing is a backlash against our economic system of making it free for people to operate as they are. But it's also a vote of no confidence to some of the institutions that have been mandated to probably supervise banks, ensure that the environment is well competitive and all that. So what we are seeing, other countries, of course, have capped interest rates, but it hasn't been good. And you should also remember that countries have not had a blanket capping of interest rates. They've done it for a very short time, and then just as a corrective measure when the markets have failed, or when there has been that asymmetry of information. So lenders really don't know which is the right rate and all that. So governments have come in and empowered probably the central banks and all that to correct the market. And at the time when that goes, the market normalizes, then you revert to the normal way of things, whereby it's the demand and supply that is really.
Some say that capping interest rates would open up the Shylocks to the market, where people go to the guys on the streets who lend money to them, because, I mean, some of the big banks, that's one of the biggest arguments, it's going to lock out a number of potential clients. What's your thought?
Well, that is interesting, and while that is true of an economic system that is well formalized and everyone, you see that the banking sector, the commercial banks have a wider latitude. But when you're talking about Kenya, where almost 70% of the population is in the informal sector, and a good number of Kenyans can't access formal financial services from commercial banks and all that. Already we are talking about a good number of people already being ripped off by this unregulated microfinance and these loan sharks. So,
and of course, that's where the credit reference bureaus also come in.
The worst that can happen, of course, is that it will make an already bad situation worse. So we will see these loan sharks mushrooming more if these interest caps come out as some of the people have told us.
So speaking about the Shylocks and the resurgence of them, if the bill passes, perhaps what's then the role of this credit reference bureaus in all this attempt to cap interest rates? Because, I mean, right now a number of Kenyans know the credit history is being captured somewhere. So you wouldn't want to default because you'll end up in that list.
Well, Credit Reference Bureau was basically brought in to ensure that people can profile the risk profiles of borrowers and know how you can lend to, different banks can have a reference point as to where they can get information on the different borrowers. I will say it has helped the bank, but it has not helped the borrowers. We would have expected that if you're seeing a borrower is good on how he's been borrowing and how he's been repaying and all that, then we should see some of those fruits being extended to the borrowers as well. But it's only helping the banks to kind of call out borrowers that are risky and all that. But if have been paying my loan on time, and I've never defaulted and all that, I think I should expect at some point this person is not that risky, so let me lower the interest rates to him. Okay. But that is not happening. But the other thing is that, of course, central bank introduced KBRR, the Kenya Bank reference rate, which basically was placed, currently it stands at around 8 or something. And then different banks should add another portion of looking probably their operation cost and all that. Yeah. But we didn't expect that gap to be so huge. But you see from 8 to almost 22, there's something wrong. Yeah.
Okay.
There's something. Yeah.
And finally, Dominic, from where you sit, give or take, do you think President Kenyatta will sign the bill?
Well, that's a difficult question because, one, you have to take into consideration the fact that we are heading into the election and the president would like to impress the voters. But at the same time, the president would also like to be seen as being pragmatic and looking at things and practically and saying, well, this is not the kind of bill that we need in this market. It will basically erode all the gains that we've made as a market. But I think you've already had one of the political players dig in and asking the government to basically assent to the bill. This bill is populist, and I think the president will play the populist card.
All right. Safe answer there from you.
Okay.
Well, many thanks. You've been speaking to Dominic Omondi, who is a business writer with the Standard newspaper. And of course, more insights expected tomorrow in the Beat, where he has an exclusive story around the interest rates. Make sure you catch a copy tomorrow.